What does it take to be among the top 10% of wealthiest individuals? Is it just a matter of earning a high salary, or is there more to it? Understanding the net worth required to enter this elite group involves examining various financial factors, from asset distribution to investment strategies. In this video, we'll dive deep into what separates the wealthy from the rest, exploring how wealth is distributed, the role of different assets, and what it truly means to be in the top 10%. Let's uncover the secrets to reaching that financial pinnacle. Wealth distribution overview. Imagine dividing the entire UK population into 10 equal parts based on their wealth. Each part represents 10% of the population, known as deciles. The wealthiest 10% hold a significant portion of the country's total wealth, about 50%. Meanwhile, the poorest 10% share only around 0.02%. This stark contrast highlights the growing divide in wealth distribution. Understanding these segments helps us grasp how wealth is concentrated and what it takes to enter the top tier. By examining these figures, we can uncover the financial benchmarks required to be in the top 10%. Average net worth figures. In the UK, the typical household's net worth is £32,500, including everything from home equity to savings and pensions. However, if we look at the average, this figure jumps to £576,000. This disparity shows how the wealth of a few high net worth individuals skews the average upwards. The top 10% hold approximately £22.4 million, while 5 individuals possess more than £51 billion combined. This illustrates the extreme wealth concentration at the top, which significantly impacts the average net worth figures and highlights the financial gap in society. The importance of business and financial assets. For the wealthiest 10% in the UK, a substantial portion of their net worth is tied up in business and financial assets, about 30%. These assets include stakes in companies, stocks, and bonds. In contrast, the next richest 10% have only about 12% of their wealth in such assets. This difference emphasizes how critical business and financial investments are in accumulating significant wealth. The top 10% often have inherited or created successful businesses, showcasing the importance of active investment and business ownership in reaching the highest levels of wealth. Distribution of wealth in deciles. Wealth distribution across deciles reveals stark inequalities. The top 10% of households hold a significant portion of total wealth, with the richest individuals accumulating vast assets through investments in businesses. In contrast, the lower deciles, especially the bottom 10%, hold minimal wealth, often concentrated in depreciating consumer goods. Each decile represents a decile of the population, with descending levels of wealth from the richest to the poorest. This distribution underscores the disparity in wealth accumulation and highlights the varying financial strategies and asset allocations across different segments of society, affecting overall economic inequality. Pension wealth and its role. Pension wealth plays a crucial role in long-term financial security, particularly in retirement. For many, pensions provide a steady income stream and are a significant component of their overall wealth. However, their importance varies across wealth brackets. In lower deciles, pensions are a major asset, often crucial for financial stability. In contrast, the wealthiest individuals may allocate less of their wealth to pensions due to reaching contribution limits and investing in more diverse assets. Understanding how pensions fit into a broader financial strategy is essential for effective wealth management and ensuring a secure retirement. Impact of financial crises. Financial crises can have profound effects on personal wealth and investment strategies. During a crisis, asset values often plummet, leading to significant financial losses and reduced confidence in the markets. For many, this results in a shift towards safer, lower return investments, such as cash savings. The 2008 financial crisis, for example, eroded trust in traditional financial systems and discouraged investment. However, it also created opportunities for those who understood market cycles and could invest strategically during downturns. Long-term financial crises can reshape investment behaviors, highlighting the importance of resilience, adaptability, and a diversified portfolio in navigating economic uncertainties. The role of consumer assets. Consumer assets such as electronics, vehicles, and household goods play a different role compared to investment assets. While they can improve quality of life, they typically depreciate in value and offer little long-term financial return. Lower wealth brackets often rely on these assets for perceived security or status, but their primary value is utility rather than investment growth. In contrast, higher wealth individuals prioritize assets that appreciate or generate income, such as real estate, stocks, and business interests. Shifting focus from consumer assets to investments can enhance financial stability and growth prospects. Investment strategies of the wealthy. Wealthy individuals often utilize sophisticated investment strategies to grow their assets. They focus on diversification across various asset classes, such as stocks, bonds, real estate, and private equity, to spread risk and maximize returns. They also leverage high-risk, high-reward opportunities like startups and international markets. Long-term investments and compound interest are key components, allowing their wealth to grow exponentially. By working with financial advisors and employing strategic asset allocation, the wealthy manage their portfolios efficiently, aiming for sustained growth and resilience against market fluctuations. Their proactive approach to investing differentiates them from others. Financial literacy and access. Financial literacy is crucial for wealth accumulation, yet many lack access to essential financial education. Those in the top 10% often benefit from advanced financial knowledge and resources, enabling them to make informed decisions and effectively manage their investments. In contrast, individuals with limited financial literacy may feel intimidated or overwhelmed by investing. Improving access to financial education and resources can bridge this gap, empowering more people to make strategic financial decisions and participate in wealth-building opportunities. Understanding investment options and financial strategies is key to enhancing financial outcomes and achieving long-term success. Over-reliance on property. Many individuals, particularly in lower wealth brackets, rely heavily on property as their main asset. While real estate can be a solid investment, an over-reliance on it limits financial growth. Property is less flexible compared to other investments and can be subject to market fluctuations and inflation risks. Wealthier individuals often diversify their portfolios with stocks, bonds, and business ventures, which provide more flexibility and potential for higher returns. Relying solely on property may restrict wealth accumulation and expose individuals to significant financial risks, highlighting the importance of a balanced and diversified investment strategy. The psychological barriers to investing. Psychological barriers can significantly impact investing decisions. Fear of loss, lack of financial knowledge, and misconceptions about risk often prevent people from investing. Many view investing as too risky or complicated, which can deter them from exploring opportunities. In contrast, the wealthy tend to embrace risk as part of their wealth-building strategy. Overcoming these mental hurdles involves educating yourself about investment options, understanding the potential for growth, and adopting a balanced perspective on risk. Addressing these barriers can empower you to make more confident investment choices. Reaching the top 10% financially requires more than just high earnings. It involves strategic asset allocation, risk management, and financial literacy. Understanding how the wealthy invest, the importance of diversifying assets, and overcoming psychological barriers to investing can pave the way for financial success. By applying these principles, you can enhance your financial standing and work towards reaching the top tier of wealth. Thanks for tuning in. If you found this breakdown helpful, don't forget to like, share, and subscribe for more insightful content. Share your thoughts and questions in the comments below. I'd love to hear from you. Keep striving, stay informed, and see you in the next video.